Hey everyone, quick sound check. Welcome back to another Outlook session and Q&A session, and possibly maybe a few trades if market is conducive. Okay, audio seems to be good. Alright, let's go ahead with the general advice and risk warning disclaimer. Note that any advice given is deemed to be of general nature, as the information or advice given does not take into account your particular objectives, financial situations, or needs. Therefore, at all times, you should consider the appropriateness of the advice before you act further. CFDs and Forex are leveraged products that carry a high level of risk and are not suitable for everyone. You can lose more than your initial deposit, so you should ensure CFD and Forex trading meets your investment objectives. Strategies and charts used in this presentation are for example only. You are reminded that past performance is not indicative of future performance. Okay, are you guys ready? I think the roller coaster ride, it's probably going to start in about 5 hours time, so we are going to prep ourselves. We've got the ADP and FP coming out in 15 minutes. Just a heads up for everyone. I don't expect a lot of movement. The current numbers that we are looking at, the ADP to gain 195,000. I never really put too much on ADP, but yeah, it's there. It's coming out in 30 minutes time. Okay, so let's get started. A few things to talk about. A few scenarios that could play out tonight with the FOMC. But as per usual, any requests, do type it in, and then we'll have a look at it once we go through some of the currency majors. Alright, let's talk about FOMC tonight. The expectation is that the FOMC is going to hike by 75 basis points. I think that's pretty much a given. There are three potential scenarios that could play out, so listen very carefully. Scenario number one is that the FOMC hikes by 75 basis points. And then probably mention that they are going to continue hiking rates. And then probably not going to slow the pace of interest rate hikes. If that's what they say tonight, then it's actually going to be super bullish for the US dollar. That's scenario number one. Scenario number two is that they are hiking by 75 basis points tonight, but if they mention that they are likely going to slow the pace of interest rate hikes next month, that's likely going to be bearish for the US dollar. And the third potential scenario is FOMC hiking by 50 basis points and mentioning that they could continue to slow down the pace of interest rate hikes. That is going to be super bad for the US dollar. Alright, so there's three scenario. One is obviously 75 basis points, they remain hawkish, then that's going to be good for the US dollar. Scenario number two, they hiked by 75 basis points but gave out a more dovish comments on the press conference. That's going to be bearish for the US dollar. That's going to be good for the US equities. And the third scenario is that they only hike by 50 basis points and they are dovish with their outlooks in the future in terms of interest rate hikes. That is going to destroy the US dollar. All right, so we got three possible scenarios. I don't think there's going to be a fourth scenario. So these are the three main possible scenarios right now. Okay, for those of you that jump in or probably not familiar with what's likely going to happen this week, or you missed out on my outlook on Monday, the roller coaster ride is going to start tonight. It will start in about 5 hours time. This is just day one. Tomorrow, the Bank of England is going to hike rates. The problem is they don't have a guidance in terms of how much they are going to be hiking interest rates, because tomorrow the UK government is going to come up with their autumn statement, and that's basically just an update on their fiscal policy. The changes from the mess up that they did early in October, that's going to be released tomorrow. The statement's going to come tomorrow. So that's an added extra worries in the market for this week. All right, that's day 2. And then day 3, obviously on Friday, we've got the NFP numbers and the unemployment numbers. The unemployment number is expected to go up by 1.1% to 3.6%, but there is a possibility that the unemployment number could remain at 3.5%. So what happens tonight with the FOMC might have a different outcome on Friday. Hopefully not. Okay, hopefully I'm hoping that the NFP doesn't do much. I think there's a lot more on the the FOMC tonight, and the Bank of England tomorrow, as well as the UK fiscal policy tomorrow. I think those are the 3 main things to watch out for, basically starting from now, right, in 5 hours time. Depending on where you're from, it could be evening to you, it could be early morning Thursday for you with the FOMC, or it could be your afternoon. Okay, so just keep an eye out. Today, it's going to start that. We are expecting a huge volatility in the market. In terms of liquidity, should be all right. We do expect a few spikes here and there. So if you do have a running positions, you might want to be a little bit more cautious. All right. Gold. Okay. I can go to gold first. Happy to go with gold first. I think I would be more than happy to talk about gold first, because otherwise everyone in the chat just gonna keep on saying gold. All right, gold, to me, we don't really have a lot going on at this point in time. In terms of resistance, we're still looking at around 1660 as a resistance. Intraday wise for gold, daily wise, it's kind of a little bit choppy. It's a little bit range bound. I'm not really looking at the movement in the past 2 days as something really significant. Again, if the FOMC is hawkish tonight, that's going to be bad for gold. So this could reverse anytime. So keep an eye out on gold. The overall trend for gold remains to the downside. I'm not expecting major movements, but let's bring out the pivots here. We did touch base on support 1 on pivot. We're right now around 1652 as a pivot level. Intraday wise, I'm still going to be looking at about 1660 as a key resistance for gold. All right, so here's what it is. You guys might picked up there's a slight divergence going on. Can it be classified as a real class A bearish divergence? Really depends on what you guys are looking at, but just pay closer attention to 1660. And ideally, I don't expect a lot of movement until the FOMC announces their rates increase. Do expect the commodities here to be traded with 1660 as a resistance. Even if it does pop a little bit higher, we do have a few resistances to keep an eye out for. Maybe around 1667 to about 1675. That's basically your resistance beyond 1660. I do see a potential scenario where we are likely going to stay below 1660 until the FOMC announces their rate decision. Okay, so might be a little bit quiet. Might see price pull back down a little bit. Not expecting crazy movement here. So even if price pullbacks down, if price finds resistance at 1660, it could pull back down. But in terms of how far it could pull back down, we're probably looking at around 1645, as key support for gold intraday wise. All right, so not much. We are probably on around the upper range here. It really depends. Okay, if you think that you might want to open a position before the FOMC happens, you got about 5 hours to think about what's likely going to happen. If you want to jump in short on gold right now, In terms of resistance, it's best if you have your stop losses beyond 1662.50. All right, that's going to be the minimum. Is it too early to jump in for a short right now? You might want to wait for about an hour, see if the stochastics crosses down to the downside. If it, this one here, let me zoom in as best as I can. Oops. All right. So yeah, the stochastics right now, it hasn't crossed yet, but if we have a cross within this hour, then probably you want to start thinking of going short. In the next hour, you might get an okay risk to reward ratio. As long as the price doesn't go beyond 1660, I'm still okay thinking about going short. Just make sure your stop losses are above 1662.50. All right, you are probably going to risk about $5.50 for a potential return towards 1645. That makes sense. It's still a 1 to 2 risk reward ratio, and it's going to be very rare that I look at gold like this. But think about the potential risk tonight. It's 75 basis points. I think that's a given. I don't expect the FOMC to do that 50 basis points hike. I think we are going to be looking at 75 basis points. But in terms of whether or not they're going to slow down in December, that's a completely different story. All right, so easy for me. Gold, intraday wise, I prefer a quick short before the FOMC. But we'll see what happens. All right, you want to wait until the FOMC. That's probably going to be even better. I think that's going to give you a lot more stability in terms of potential risks in the market. It's still not peaking out. We don't really have a significant high, swing high that we can pick up as a potential resistance. We're really basing resistances on previous key levels, which is around 1660. That's basically it. Pretty easy on gold tonight. If I'll be honest with you. A lot of people are expecting the FOMC to slow down the interest rate hikes. I still think they are going to go with 75. And I still think they are likely going to say that they would maintain a 50-75 basis point hikes in December. If they say that they're anticipating another significant rate hike, then you do know that's going to be 75 basis points next month, right? That's the wording that comes out from the FOMC. That's pretty much it. That's going to seal the deal for the US dollar. Okay, so the FOMC decision, again, it's always never about the interest rate hike. We do know that they're going to continue hiking rates. It's during the press conference that Jerome Powell might say something regarding the future or next month's rate hike. That's going to be what's going to move the market. It's not the rate decision unless they go with 50 basis points. If they go with 50 basis points, then during the press conference, they're likely going to say, yeah, we're going to go with 50 basis points next month. So that's going to be really, really dovish coming out of the FOMC. If that statement comes out, if they only hike by 50 basis points, then gold will likely shoot up towards 1675. Okay, so think about it. If you want to open a position right now or you want to wait for the FOMC, the risk is there. You are going to open up yourself to a lot more risk if you start now, 5 hours before the FOMC. All right, that's gold. Easy. I prefer to go short. ADP 239, consensus 195, which was good for the US. But again, do I expect anything much coming out? Not really. Let's see the Euro USD first. Okay. For those that missed out on last week's webinar, we were looking at a potential change in trend, right? And on Monday's webinar, I updated you guys on Monday's Outlook. I updated you guys that we're actually borderlining. This is actually within the Ichimoku cloud. We do have a strong support at 98.50. Now this is being pressured towards that support. Take a look at the daily stochastics here. It could be very easy for the Euro USD to break below 98.50 and triggers a potential continuation to the downside. So keep that in mind. Okay, last week we were looking at a symmetrical triangle. It break to the upside, but right now, if we take a look at the whole current formation, this was last week. We broke to the upside, but we deleted this resistance trend line because it's technically useless. This is what I'm worried about, and I'm going to zoom out, and you guys can see what's going on here. In terms of range, it should be beyond 20. So we're looking at an ascending channel in a downtrend. So that's that. Is it concerning? Yes. So what I'm saying from last week is that we are borderlining. We don't have a lot of confirmation in terms of a long-term underlying change in the Euro USD trend to the upside. We might transition. We are not seeing that transition on the Euro USD yet. All right. We're within the Ichimoku cloud, so there's bound to be a lot of uncertainties going on with the Euro USD. Key support I'm watching out for tonight is actually going to be 98.50. In terms of daily momentum, if it does cross below 98.50, it could potentially slide down even lower. Now let's translate that onto the hourly time frame. We're well below the Ichimoku cloud. I was expecting a little bit of a pivot around 99 cents, potential return towards $1. Not seeing that. We broke below 99. We do have that support around 98.50. Take a look at the current momentum on the Euro USD. It's right now trading below the Ichimoku cloud. It actually opens up a potential push lower. We got 98.50. That's basically the 100%. If it slides even lower, then we could potentially look for support at around 98, and then we've got 97.50. All right, so it is still reasonable in terms of potential range. Should you open a position early? That's going to be the question tonight. All right, if you want to trade the FOMC, you should be gearing up for what's likely going to happen. Now, I don't know what's going to happen. That's why I gave you that 3 scenario. That's scenario 1, scenario 2, scenario 3. Okay? If scenario 1 happens, and it's actually going to be good for the US dollar, then do expect the Euro USD to slide down even lower. On the daily channel, we do have an ascending channel. On the hourly time frame, we actually do have that support trend line as well as that channel. All right? So we could potentially see a close on the hourly time frame below 98.75. That could trigger a short-term intraday short, or it could actually initiate that short to the downside for the Euro USD. So if you're thinking, yeah, I like to trade the Euro USD, I think the US dollar is still going to be strong, then if you are thinking of jumping in for a short right now, you have a couple of options. You could wait for a close below 98.75. Which is over here below that support trend line. Okay. Or if you're eager right now, you might want to jump in here, but look at it. You're only giving the market about 20 pips of range. I don't think it's worth it. I much prefer to have more confirmation. I would just wait around 98.75. I'll be risking it's still a good risk. We're looking at about 36-40 pips. Reasonable, right? Because we could be looking for a potential push towards 98, 97.75. That's going to give you a great risk-reward ratio. Are you expecting, more than 100 pips tonight? I don't know. That's the thing. All right, but if you plan it well and you're patient and you want to trade tonight, you might get an entry maybe an hour or two before the FOMC. So we'll see what happens. I think a lot of people are actually going to be sidelined until the FOMC is done with their press conference. But here's the likelihood on the Euro USD. On the daily, I'm not expecting a huge price movement because we still have a lot of support from the Ichimoku cloud. We're still within the Ichimoku cloud. We got a daily support trend line. So on the Euro USD on the hourly time frame, if you're going to be trading intraday, just keep an eye out. You might have to be paying closer attention towards 98.50. Is it worth it? It really is up to you. So last Monday, there were talks about, hey, is it safe to take 30, 40 pips out of the market this week? I think it's still a reasonable range. But yeah, think about it. If there is actually a close below 98.75, then we could potentially see that push lower towards 98.25 and potentially 98 or 97.75. it's adjustable, but this is going to be your initial risk reward ratio on the Euro USD. Okay, that's Euro USD. Pound USD, we did talk about this. We have that resistance 1.1650. Above that, we've got 1.1750. This has actually transitioned across the Ichimoku cloud. Okay, can we say that it touches 127.2 and be done with it? You know, maybe just to make things simple, we have touched 127.2 last week. This has pulled back down a little bit. So if you're looking for how far down the pound USD could pull back to, this is going to be the fib you're going to be using. Okay. Do I anticipate a scenario where it goes to the upside? No, I actually anticipate a little bit of a pullback to the downside. We could potentially find support at 1.13 to 1.12. That's going to take it towards 61.8 to 78.6. But this blue arrow here, it does indicate, you know, price could actually pull back down all the way down to 100%, and it's still going to be completely okay. It's still going to be above the Ichimoku cloud. Okay, so that's pound USD on the daily. Nothing much, nothing quite interesting. Hinges a lot on tomorrow in terms of what Bank of England is going to be doing. The expected rate hike for Bank of England tomorrow is 75 basis points, but there are talk of a potential 100 basis points. The thing is, Bank of England might be a little bit more cautious. Bank of England might look at what FOMC is doing tonight before they come to their decision tomorrow. I'm not sure about the autumn statement. Is it going to come out earlier before the Bank of England is done? So yeah, we'll see. But it's going to be tough because it's not just Bank of England tomorrow in terms of hiking interest rate. I'm more concerned about the UK's autumn statement. I'm more concerned about what the fiscal policy is, because we've got new Prime Minister that really knows what he's doing. He's the ex-Chancellor of the Exchequer, basically ex-Finance Minister. He predicted what's likely going to happen if the mini budget was announced, basically that. So he's currently the Prime Minister. We've got the Finance Minister that kind of reverses what that mini budget was, but they pushed back the announcement. It was supposed to be announced on the 31st. It was supposed to be announced on Monday. They pushed it back, and they're going to be announcing that tomorrow. So if you're trading sterling, be a little bit more cautious. And this is coming from me, whose main trade is actually on the sterling, on the cable. So I'm just warning you guys. There's going to be a lot of volatility for the pound USD. But on the general sense, from a technical term, we have transitioned above the Ichimoku cloud. It's just that the pullback might seem dip, but it's still going to be okay. All right. How does that translate to pound USD on the hourly time frame? We are looking at price pivoting around the 1.15. So don't expect a lot. I'm not seeing any patterns here. Do I see a little bit of a short-term resistance? Yes, there are actually two resistance trend line on the pound USD. We actually got this one here going down. All right, that still works. And then we've got one like so. Yeah, not that much of a difference, right? So I'll take the major one in terms of resistance. That's going to be that. Okay, we are below the Ichimoku cloud for the intraday look. Do we see potential push lower? We've got a couple of support. We've got 1450, 1450, 1400 on the pound USD. So pick your poison. But if you're thinking, I think the FOMC is going to go hawkish tonight, then you're better off looking for a short position. Just be mindful, if you take your stop loss here, that's not giving a lot of room. So if you're thinking of going short, I will have my stop loss slightly higher, maybe around 70 pips of stop loss. In terms of target, I'll be looking at about 1.14. In terms of intraday fib, This is going to be the fib you're going to go with. So 1.14 is going to be very close to 127.2. This is reasonable, but unlike the Euro USD where you actually have a smaller stop losses, this is going to be huge. Your minimum stop loss could be this. You could do that. Just thinking, you're not really giving a lot of room for a lot of spikes tonight. A lot of volatility is expected tonight. We might see price spikes. So you want to be on the safer side. You want to have your stop loss a little bit higher. All right. So if I were to choose, all right, I would wait. That's me. Okay, but if you're an intraday trader and you want to get into the action, you don't want to miss out on that potential run on the FOMC, the higher probability is actually currently skewed towards a hawkish FOMC, a 75 basis points, and maybe either a neutral or hawkish stance coming out from the press conference with Jerome Powell tonight. Okay, if they say inflation is still a concern, inflation is still high, that word alone means that they are likely going to continue hiking rates with a significant rate hike in the coming months. So this, it's going to be a little bit tough. It's not going to be for everyone. It's not as simple as reading, oh yeah, 75 basis point hike, 50 basis point hikes. No, it's always going to be with what's going on with the press conference. If you don't think that you're into this, you're not up to all this fundamental mumbo jumbo, then if you look at it from a technical standpoint, this is kind of the minimum risk that you should give. In terms of going long on a pound USD, I don't like going long. I don't like shorting the US dollar ahead of an FOMC that's going to be scheduled to hike rates by 75 basis points. That's already high enough. And we don't know whatever comments that comes out from it. So think about it. I much prefer to go for a short on a pound USD. Your option is, if you want to risk small, have your stop loss maybe you're above 1.1525. That's not really giving a lot of room. I like this one here, just likely beyond 1.1550. That's giving enough room. So either you have that 60, 70 pip stop loss, or you might shrink that stop loss to about 40 pips. But why do I keep getting this? Okay, so that's pound USD. Really simple. If you want to get in early, just make sure your stop losses are there. You know your stop losses. Just put it above the Ichimoku cloud. That's kind of the bare minimum. That's why I don't like the shorter stop loss, because that's still within the Ichimoku cloud. I would have it a little bit higher above that Ichimoku cloud. So the minimum stop loss that I would have is at 1.1550. That's going to give you about 56 pips of risk. Okay, easy. Euro USD, pound USD, a little bit easy. All right, let's talk about, before we go on, there's a request on pound AUD. Okay, pound AUD, not really seeing a lot of problem with pound AUD. It is pretty volatile in terms of whatever's going on here. Key resistances to watch out for, we've got 1.82, I believe, and then 1.8. So that's going to be a range. This is an exotic currency. Do not trade this if you're new or not familiar with the pound AUD at all. Even I don't trade pound AUD, so trade this at your own risk. This is crazy. But hey, if you like pound AUD, here you go. Those are your key resistances. You got 1.8, you got 1.82. In terms of a pullback, do I anticipate a little bit of a pullback on the pound AUD? It should, because right now we are facing a lot of tough resistances. If we do break above 1.8, 1.82, then we could potentially see 1.835. But right now, keep an open mind that we might see a little bit of a pullback to the downside. It is overbought. It was overbought. All right, so we are actually below 80 right now. So in terms of potential short on a pound AUD, this is on the daily, just to give you a glimpse first on terms of daily. If you're thinking of going short for that correction to the downside, make sure price is trading below 23.6, so we're probably looking at 1.7650 if you're thinking of going short on a swing. Okay, so I would wait for a close below 23.6%. You can have your stop loss at 1.82. In terms of target level, you can have your 50%. That's going to give you 1-to-1. Or you could aim for a little bit closer to you could aim for 1.7 or closer to 61.8%. It's huge, right? Minimum risk, you're looking at around nearly 600 pips. So think about it. This is not going to be for everyone. And for someone that just asked me that, make sure this is something that you know the risk that's involved with. All right, pound AUD on the hourly time frame might look a little bit different. Overall, we could potentially see a little bit of a correction to the upside in terms of the hourly time frame. That correction could be this. So yeah, if you're thinking of jumping in, just be mindful. I don't like going long pound AUD because we are going to go against the trend. Since the correction level, you could be potentially looking at just a bounce up to 61.8%. So I would wait. I don't like opening up a new position on this one unless you want to count in a breakout. If you're looking for a breakout, then you want to see an hourly close below 1.7875. Okay, that's going to be a trigger point. Make sure there's an hourly close below. Okay. Yeah, Ken channel, I noticed it. No sound. Thanks. How's audio right now? Is audio good? Okay, where did I got cut off? Where did I got cut off? If you guys can fill me in. At which point the audio got cut off? Is it during this discussion about pound AUD? Or before that? Good? Fill me in, please. Where did we got cut off? Somewhere in the middle of GBP AUD. Okay, I'll make things a little bit simpler here on the pound AUD. This is not going to be for everyone. If you don't have a short position, in terms of risk to reward ratio, think about it. It might not be worth it. If you have a short position, a little bit higher, then your minimum stop loss is going to be above 1.8 if you're trading intraday, right? This is going to give you about 70, maybe 60, 70 pips of risk. But if you think you're going short right now, your risk to reward ratio is about 1-to-1, about 100 risk, 100 gain. That's intraday. This is only just intraday. If you are looking at the potential on the swing, probably wouldn't be looking for a position unless it closes below that 1.7650. That's going to take it below 23.6. Then you can have your stop loss at 1.82. This, I would caution a lot of you not to. Okay, you are looking at a minimum of close to 600 pips of potential stop loss. That's your risk. But yeah, think about it. It's way too risky. It's not my cup of tea. Pound AUD is an exotic currency. I expect a lot of volatility. Expect a lack of liquidity. Expect the spread to be a lot bigger as well. A lot of risk involved. All right. So yeah. Pound AUD advising on a 60 pip stop loss. If you already have a short position, if I don't know if someone asked me that on Pound AUD, do you have a short position already running on Pound AUD? If you do have a short position running on Pound AUD, where's your entry level? If you are going short regardless, where you get in, your minimum stop loss is going to be above 1.8. So think about it. I don't like this. I wouldn't give this to anyone that trades normal major currencies. You don't have experience in Pound AUD, stay away from it. You don't have any experience trading sterling, stay away from it. We've got huge news coming out come from Bank of England and the UK government tomorrow. That's going to highly impact the sterling. Volatility on Pound AUD is going to be huge. Liquidity is going to be a bit low. Spread is likely going to be wide. So if you don't have experience, stay away from this. I'm only answering someone that was asking me about Pound AUD. All right, that's Pound AUD. So that's, I think, let me go through the requests here. Audio. You got Euro Swiss. Someone's asking Euro Swiss. Gold is already discussed. So if you want to review earlier for gold, then do review it. But let me just go quickly on gold. Just quick. This is basically the first thing we talk about gold, right? So gold, in terms of daily, it's still going to be below the Ishimoku cloud. Stochastic is still going to be about in the mid range. On the hourly time frame, this is your potential risk here. If you want to go short, make sure your stop losses are above that. But really, we don't actually have anything to go by with. At least on this hour, it still continues to create a new high. We don't have a significant turnaround on gold. But if you must get into gold tonight before the FOMC, then make sure the stochastics or the RSI starts going down. I want to see the stochastics goes down below 80. Then yeah. There is a slight divergence if you take a look at how gold is going on, but this is not really a strong divergence because technically we are not in an uptrend. So think about it. We do see a little bit of resistance around 1660. So yeah, if you think of going short gold, maybe wait an hour or two. You might be able to get in before the FOMC, but remember the scenario. Obviously, you asked gold now again, so you missed out the scenario. Anyone that just jump in right now, let me just remind you what that scenario is. Scenario number one, this is talking about US dollar. If the FOMC hiked by 75 basis points and gave out hawkish comments, i.e. they say that inflation is still high, they might need to do another big interest rate hike, that's going to be the wording. This is going to be super bullish for US dollar. All right, that's scenario number one. Scenario number two is that they hike by 75 basis points tonight, and then during the press conference they say like, look, we noticed that maybe other numbers are not doing so well. We might have to slow down the pace of interest rate hikes. this is going to be bearish for the US dollar, but not hugely bearish because the FOMC is still high by 75 basis points. The one that could destroy the US dollar, that this is scenario number 3, and I don't expect scenario number 3 to play out. I still expect scenario number 1 to play out a lot more. Scenario number 3 is that tonight they only hike by 50 basis points, and then they say, look, I think we have done enough. We might slow down the interest rate hike, the pace of interest rate hikes. Then the market's going to expect a smaller interest rate hikes, maybe at 50 basis points or 25 basis points in December. This is going to destroy the US dollar. This is going to boost the euro. This is going to boost the euro. This is going to boost the sterling. This is going to boost the yen. It will crush the US dollar. I don't think scenario number 3 will play out. Okay. In terms of probability, I'm still leaning towards number 1. The market right now is pricing for scenario number 2, where the FOMC is going to hike by 75 basis points, but they are going to sound a little bit less hawkish on their press conference. Okay, so if you think of going short on gold and you really need to go short for whatever reason, or you really need to open a position for whatever reason, then I prefer a short, making sure your stop losses are above 1660. In terms of target level, you're probably looking at 1650, 1645. Fair enough. You might get a little bit lower towards 1640, but right now I'm just targeting where the Ichimoku cloud base is going to be on the hourly time frame. Okay, so since we talk about pound AUD, let's talk about Euro AUD. Okay, Euro AUD, it's again something that we did trade Euro AUD last year, but that was more on portfolio management. Euro AUD on the daily time frame, this is likely going to test the Ichimoku cloud. So this is the current trajectory of the Euro AUD. We are slightly beyond 61.8. We have room towards 78.6. We could even push towards 127.2, where the key level is going to be at 1.55. Okay, that's the outlook on the Euro AUD. It's really pushing up higher right now. This is Euro AUD on the hourly time frame. If you're thinking of going long on Euro AUD intraday wise before the FOMC, it's alright. Shouldn't have a lot of impact unless the US dollar crushes the euro, then you could see a huge drop in Euro AUD. But right now in Euro AUD, it's going to be a little bit too late to jump in for a long, because if you jump in for a long right now, your stop losses are going to be here around 1.5375. In terms of target level, you could be aiming for 127.2. That's still going to give you about very close to 1-to-1 risk reward ratio. Is it worth it? It's up to you, really, because right now you could have your stop loss at this low, or you could have it there, but I think it's a little bit too early, so I much prefer to have it here. Okay. In terms of position trades on the Euro AUD, I don't think it's advisable, considering the Euro AUD right now is going to be testing Ichimoku cloud on the daily. So on the hourly time frame, either you already have a long position. If you're thinking of jumping in long on Euro AUD, your stop losses are going to be about 62 pips. Your potential target is probably just going to be about 59, because there's going to be a limit at 1.55. Okay, really simple on Euro AUD. Euro Swiss, I don't even have Euro Swiss here. Alright, let me add Euro Swiss. Alright. I don't even have Euro Swiss, so it goes to show that this is something I haven't looked at. In fact, I'll be honest with you, I haven't actually traded Euro Swiss since it broke below 1.2 back in 2016. But anyway, this is Euro Swiss on the daily. Let's take a look at what's going on Euro Swiss on the daily. Right now, momentum is probably turning around. Do I expect a huge push lower? No. Maybe we look at potential around 61.8%. This is going to be about here in terms of resistance. It's actually going to be between 50% to 61.8%. That's kind of the expected range on Euro Swiss. Do I want to open a position on Euro Swiss right now? I don't really think it's worth it. If you go short right now, you're going against the trend. If you want to trade the Euro Swiss, then I think it's much better if you wait for a bounce around 97.50 on the daily time frame. On the hourly time frame, I wouldn't trade this as well. Momentum is a little bit flat. Might be a breakout scenario here on the Euro Swiss on the hourly time frame, but it's not going to be from this low. It's actually going to be from this one here. In terms of potential breakout, we are looking at a potential range. Yes, I don't think I need to highlight that, but if it does break below that 98.50 on the Euro Swiss on the hourly time frame, that's your cue to go in short on the Euro Swiss. I prefer to go for a short right now. So think about it. What does that tell you? A lot of the majors are currently showing signs of really more of a correction rather than anything else. So I don't really see anything bullish coming up from the Euro AUD, Euro Swiss, Pound AUD. So yeah, if you really need to trade Euro Swiss, or look, if you ask me something, you probably have a position running on the Euro Swiss. If you are thinking of going to short the Euro Swiss, just make sure there's a break below 98.50. Take a 1-to-1 risk reward ratio. That's going to bring you down to about 98.50, 98.10. I might as well go 98.10. All right, risk reward ratio might be worth it. You know, some people might like it, but I'm not looking for a long on the Euro Swiss. Just because the hourly time frame is still below the Ishimoku cloud, so I much prefer to go for a short or a breakout to the downside for the Euro Swiss. Alright, let me check the audio. Audio seems to be good. Everything's good. FOMC serious news. Are you kidding me? Alright, guys, if you missed out, I basically recap it twice. There are three potential scenarios. We are in for a roller coaster ride. It's going to be today, tomorrow, and Friday. Today it's going to be FOMC. Tomorrow it's Bank of England, and as well as the autumn report, which is the UK fiscal policy from the new government, which is probably going to undo whatever the mini budget did, which was crashing the sterling on early October. Right, that's day 2. Day 3, we've got the NFP, all happening within the same week. So yeah, if you're not into fundamentals, then you can go by technicals, but don't blame me if you get spiked here and there, or if suddenly liquidity dries up, the spread widens, you see crazy movement. I haven't even talked about the dollar yen. If you guys trade the dollar yen, you trade yen anything, today you see that 50 pips drop this morning. So yeah, we haven't even got there. GBP AUD advising on 60 pips stop loss. I'm not advising you, I'm warning you. So yeah, I don't think it's for everyone, but someone asked me, I'm just going to answer it. Simple as that. I have a short Euro AUD at 1.57. Should I get out now before the FOMC? We did talk about Euro AUD, yeah? Euro AUD, should you get out short at 1.57? Nah, don't worry too much. If you're short at 1.57, it's so far ahead. That's way up top there. So not really too concerned. Is the ADP result represent anything on NFP? No. ADP, if you don't know, or between the difference between ADP and the NFP, the ADP NFP tonight, that's coming out from a private payroll company, right? The NFP number that comes out on Friday, that's coming out from the U.S. Bureau of Labor Statistics, I believe. Right, so that's official government stuff. Doge, hey, I love Doge for the fun of it. You guys see a huge gain on Doge. All right, Sterling Swiss. Why do you guys like to trade Swissy so much? Yeah. Can we go sterling Swiss and then let me talk about dollar yen, because I really need to talk about dollar yen because you got FOMC tonight. You really need to take a look at that. Sterling Swiss on the daily, this is pretty much about the same. There's a slight transition above the Ichimoku cloud. This is really dangerous. If you take a look at how price is moving right now, take a look at that short extension here. We are pretty much around 161.8%. Now, if you're thinking, sterling Swiss, this is my take on pretty much anything sterling. Sterling, like the pound AUD, pound Swiss, pound USD, has transitioned above the Ichimoku cloud. But for it to continue to go up, it needs to test the Ichimoku cloud. So that could be a potential for sterling Swiss, sterling USD, or pound AUD to actually pull back lower. So this one, in terms of pulling back lower, it could go all the way down to 61.8, maybe even 1.1. Heck, you know what? It could go even all the way down to 1.08. All right? It could go all the way there, and we would consider this as a correction, as a normal correction. If I'm going to be trading sterling and I look at sterling pretty much my whole trading career, I'm waiting for something to happen. I'm waiting for that pullback to happen. I'm waiting for a bounce off the Ichimoku cloud. That's when I'm actually going to be positioning myself. But look, my style of trading is not going to be for everyone. You guys, some of you guys that know my style of trading is that I'm a swing trader. I'm a position trader. I could hold for weeks, for months. I don't scalp. I don't really trade intraday. I don't really take anything that would yield me 20, 30 pips. I'm not into that mindset. So yeah, it really depends on everyone's view. So if I were to say the sterling Swiss, I'm expecting a little bit of a correction to the downside if it does happen. Does that mean that, hey, you know what, I can't trade? Yeah, you can still trade. If there's a daily close below 1.14 on sterling Swiss, all right, that's going to be below the 23.6. You could have your stop loss there, which is going to be about 200 pips. You could target 61.8. You could target 78.6. That's still going to be okay. Does that give you a risk reward ratio? That's okay. Yes. But take a look at it. You are risking close to 200 pips. Potential gain 300 pips. Someone was saying just now, this guy crazy giving me a stop loss of 600 pips. Yeah, but the gains that I gave you is not 80 pips, it's 800 pips. That's for daily. It's not going to be for everyone, right? So this is sterling Swiss on the daily. If I were to jump in on sterling Swiss on the hourly time frame, I might have a different view. We might see that pullback happen. We are still anticipating that pullback to happen because we are already transitioning above the Ichimoku cloud. Do I have key resistance? Yeah, I do have key resistance at 1.2. Do I expect price to continue to go up to 1.2 right now? No, I don't. I don't think price could just go up to 1.2. That's nuts, right? That's 600 pips on the hourly time, on the daily time frame. I'm not expecting that to happen. So I do expect a little bit of a pullback to happen because we just don't have enough momentum. On the hourly time frame, we are starting that push to the downside because right now we are actually trading below the Ichimoku cloud. Like the Euro Swiss just now, this is going to be a range breakout scenario. This is going to be this. Yeah. What's that range? You are looking at 55. So if there's an hourly close below this, then yeah. If there's an hourly close below 1.1450, you might be able to go short, but probably not for long. Just make sure your stop losses are above that or pretty much at the Ichimoku cloud. You might go for about here. That's going to give you a risk reward ratios of about not even 1-to-1. 60 risk, 53 gains. Is it worth it? I don't know. It's up to you. So if you're asking me on sterling Swiss, hopefully you do have a position, whether it's one direction or the other. This is just my opinion, my view on the sterling Swiss. I don't know what's going on today. I don't know why a lot of you guys are asking me exotics, but let me just warn you, if you are new, you just jump in. A lot of these people are asking pound AUD, euros AUD, euros Swiss, pound Swiss. These are exotic currencies. This is not going to be for everyone. There's going to be huge volatility. There's going to be less liquidity. Spread could widen. Anything could go. All right. So unless you are experienced in these currencies, I would say these are not good choices, especially for beginners. I would say stay away from it. All right. Simple. Let me go through the dollar yen before we wrap up for tonight. Let's take a look at the dollar yen. Something happened today. Still cannot determine if it's an intervention. I don't feel it's an intervention, but the hourly drop today, it was basically like 50 pips within the hour on the dollar yen. So dollar yen, let me give you a rundown first, which, you know, I'm sounding like a broken record. I've pretty much stated this in the previous two outlooks every Monday. Nothing has technically changed on the dollar yen. We still have key support at 145. We've got another support at 143. The underlying trend is still to the upside. We still have resistance at 150 and beyond 150. Now we've got 152. The only concern with the dollar yen, and for those that do not care about what's going on with yen, time for you to know what's going on with yen. In the month of October, there's two intervention. One official, the other one was a stealth intervention. This was highlighted. The first intervention was late September. Second intervention was 21st of October. So 1 month gap, we got two intervention from Japan's Ministry of Finance. All right, I don't know why a lot of people keep saying Bank of Japan. It's not Bank of Japan. It's the Ministry of Finance that's intervening in the currency market. So technically, if you are checking the underlying trend, nothing has changed. Key support remains 145, 143. Key resistance remains 150. What's interesting is the intraday view of this, because right now, if you guys want to know what I'm talking about, this is this. This is what it is today. We basically have a 100 pip drop, 95 pip drop within a period of 2 hours. All right. If you take a look at it on a 50-minute time frame, that's a period. That's pretty much it. It's a significant drop, right? We got a 100 pip drop. That's one full yen that drops to the downside. We cannot confirm if this is an intervention. I've been talking to a lot of my colleagues today. We just don't know. Doesn't feel like an intervention, because an intervention wouldn't do a 100 pip drop. An intervention would do 3, 4, 5 yen drop. Okay, so I don't think this is an intervention. I think this is more of a position adjustment ahead of the FOMC in the next 4 hours. Okay, so on the dollar yen, I would caution you from going short the dollar yen, despite the early time frame transitioning below the Ishimoku cloud. We might still see a little bit of a push higher if the stochastics crosses over before the FOMC or after the FOMC. Key level intraday wise, keep an eye out on 147.50. If there is a close above 147.50 intraday, we might have this as a potential swing. We could potentially head low higher, maybe 149, 150 if the FOMC is hawkish. All right, this could be a potential scenario. So a level to watch out for, you definitely want to watch out 147.50. If there's a close above 147.50, then it could get pushed even higher. Do we have the momentum for it right now? It could be turning into that momentum. This is the direct opposite of what did we just look at? Just notice a slight cross A divergence. Now the stochastics cross, right? We're just waiting for this one to move above 20. That could happen when price trades above 147.50. You want to position yourself for dollar yen. If you think you want to trade dollar yen, if you're not worried about an intervention and stuff like that, if today wasn't an intervention, the market would reclaim what it dropped today. So there is that possibility market could get pushed back up close to the 149. Okay. I would be more worried about the official intervention closer to 150. So I prefer to go long the dollar yen. If it closes above 147.50 on the hourly time frame, I would trade that towards 149. Okay, probably not going to be aiming for 150, but I like 149 to where it is. Whether we can take a position to sell gold if price goes into the order block area at price 100. Well, I'm not sure about your order blocks here, because the order blocks are really going to be tough and really hard to verify. But my view on gold, I'll be honest with you, I'm a scenario number one guy. I really am more of a anticipating a potential FOMC that's hawkish. I've been playing that card and it has served me well. I really don't want to go against the US dollar. And look, if they could, regardless of whatever the comments is, if they hike by 75 basis points, it's not going to do good to gold. Okay, we might see a little bit of initial spikes here and there. But let me answer that question for you. You want to short this around 1661 as your key resistance. I'm guessing that's what you're trying to say. That's basically it. I would say if you want to short this, make sure your stop losses are above 1662.50. Okay, but that's it. Do I want to go short? Yeah, it's not really time yet. I really want to see the stochastics crosses over. Right now it's not. This is going above 80. Price could get dragged up even higher. So I don't think there's any rush with gold. You're not going to miss out a lot. If FOMC is super hawkish, gold's just going to get crushed. We might see gold really drops down to the lows here around 1630, potentially even lower towards 1625. That we look on the daily, below 1625. Obviously, we've got 1600. So no rush with gold. But if you're asking for my opinion, I much prefer to take a short on gold once the stochastics crosses over, not as it is right now. Okay. All right, one final one to wrap up for tonight. That's going to be sterling yen. Let's go daily. See, sterling yen. I do expect a little bit of a pullback. Let me go through all the sterlings. All right, we've got sterling yen. We've got pound USD, pound New Zealand, pound AUD, pound Canadian, pound Swiss. What are the similarities between all of them? They're all about the Ichimoku cloud. So in terms of the yen, yeah, we've got 170. 170 is going to act like 150. It's going to act like 148 on the euro yen. It's going to act like 150 on the dollar yen. Right now, I'm okay with sterling yen. I'm just not okay holding a longer term position on sterling yen because I do expect a little bit of a pullback to the downside. Now in terms of pullbacks to the downside, on the early time frame, we actually have a little bit of support at 168. Is it 168? Yeah, it is 168. Okay, which is huge. It's far away. But here are the things. Can it get to 168? In terms of fib that you are going to take, is actually going to be this cycle. All right, that 168 is actually going to be close to 127.2. So can this one go lower? Yeah. Should you go short on this one? That depends. If you have a short position on sterling yen, then you need to adjust your stop losses. But if you're thinking of going short on this one, maybe you can trade this based on a breakout. We might see a breakout below 169. If there's an hourly close below 169, then that could actually initiate a breakout intraday. Okay, if that breakout happens, you want to target 168, then by all means, this is going to be it. In terms of stop loss, this is going to be it. You are going to have your stop loss at 170. In terms of target, you got 168. That's not going to give you a perfect one-to-one risk-reward ratio, but this initial stop loss, which is 100 pips, can be adjusted once price goes lower, close to the 168.50. You can actually use this as your stop loss. So initial stop loss is going to be 100 pips, but you can shrink it down to 50 once it starts progressing lower. Okay, on a bigger scale of things, this is not going to do much, because if we take a look at what we're targeting, you got 168. It could it go even lower? Yes, it could go even lower. Does that change the trend? No. I'm just warning you right now. With all sterling, there's a possibility that we are actually looking at a change in the underlying trend. The key here is that trend change on sterling requires a test of support. We basically need to see Ichimoku Cloud support get tested. But once that's done, I don't know if that's going to happen within 1 week, 2 weeks, or maybe within 1 month, the month of November. You know, I'm still looking at that scenario here. So I'm expecting a little bit of a pullback coming out from all sterlings. Is the key trigger going to be tomorrow? I don't know. If tomorrow's going to be good for sterling, if there's financial stability coming out from the fiscal policy, if the fiscal policy makes sense, then that's going to be good for sterling. If Bank of England decided to hike full percentage tomorrow, that's going to be good for sterling. That's going to initiate that change immediately. Okay. Just technically, I'm just a little bit more cautious. You know, that we might see a little bit of a pullback, and a lot of people are going to get confused. This pullback is not a downtrend. This pullback could just be a correction, but the underlying trend would have changed for sterlings. Sell gold for scalp. By all means, go for that as long as you got your stop loss right. 162.20, 166.250. All right. Okay. So apologies for the slight interruption on the audio. Hopefully the audio is okay throughout the session. Really good luck with the trades. Roller coaster ride is going to start in 4 hours time. Hopefully nothing major, but you know, knowing me, expect the worst to happen. So yeah, this is going to be that volatile week. It's going to be a huge impact in the market coming up from the FOMC, the UK, and then on Friday we've got the NFP. I'm more concerned with the unemployment numbers. You know, it could be a surprise, unchanged 3.5% or even lower. You know, I might not see the unemployment rate go up to 3.6%, but we'll see what happens. All right, thank you all. Good luck with the trades. Stay safe, and I'll see you Friday. We've got market correlations for Friday's webinar. Okay, so I'll see you soon.